Hello everyone. Today we're going to have a brief market recap, then talk about today's ADP report and ISM non-manufacturing index. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my opening market comment. Well, the dollar is opening much weaker in Europe today, but I'm afraid I can't figure out why exactly. If anything, the FOMC minutes yesterday were rather hawkish and should have supported the dollar. The main focus in the market is the offshore yuan, the Chinese currency. It's the biggest mover. It soared as China tries to stop capital outflows. Overnight interest rates in Hong Kong more than doubled from yesterday's levels as short sellers got squeezed. But the surge in the CNH doesn't seem to have been behind the sell-off in the dollar against the G10 currencies. Oil prices gyrated after the American Petroleum Institute's weekly figure showed a massive 7.4 million barrel drawdown in inventories of crude oil during the latest week. That compares with only a drawdown of only 2.25 million that the market expects for today's Department of Energy figures. Now, although crude inventories fell sharply, gasoline and distillate inventories showed the biggest rise since January. So it's not clear whether there's really any end demand for oil products, for petroleum products. At the end of the day, though, oil prices are indeed higher this morning. Now, the main indicator coming out today is the U.S. ADP employment report. ADP is a private company that processes payrolls for other companies. Their huge customer base is a pretty good random sample of the U.S. workforce. So their estimate of the change in payrolls is closely watched each month as a predictor of what the non-farm payroll figure is going to be. The market consensus for the ADP report is 175,000. That would be in line with a recent NFP figure. Last month was 178,000. Now, the whisper figure, not the market consensus of economists, but the whisper figure, which represents what people in the market in general think, is now closer to 200,000. Now, of course, there's no guarantee that the whisper number will be any more accurate than the market consensus estimate from economists. It just represents what side the market skewed to. In this case, we can see that a negative surprise for the figure is likely to be more surprising to the market and therefore result in a bigger move in the dollar than a positive surprise. The U.S. ISM non-manufacturing PMI is forecast to be down 0.5 point, but its relatively high level still points to a healthy expansion, so I wouldn't get too excited about any decline here. The long-term average for the non-manufacturing ISM index is 54.2, so a reading of 56.7 as expected would still be relatively strong and should support the dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.